Once you discover the ICT concepts, you will never be able to see the markets the way you see them like retail traders. You learn how algorithms manipulate traders and induce them into liquidity, but you still can't even figure out which kind of liquidity you need to trade and which kind of liquidity you to target, and taking lots of losses out trying to trade these concepts that if you don't understand them, they are going to hurt you more than they help you. And I totally understood. In the beginning of my journey, 4 years back, I traded ICT. I almost gave up because I just got to the point where I couldn't identify the liquidity. And you know that if you can't see the liquidity, you will become the liquidity. So in this video, I am not only showing you which liquidity we should trade, which liquidity you should target, and I am going to show you the exact entry pattern that I used in order to get funded with $50K. I'm going to each and every element to make sure you are picking the highest probability liquidity pools and then the exact entry models all with the chart examples. So make sure to pay attention to every part of this strategy. This strategy only works if you follow each and every rule in the checklist provided in this video and do exactly what I said. So enough for the discussion. Let's go ahead and get into it. The goal of a profitable trader is to go in the flow with the algorithm. Always algorithm seek for the liquidities to deliver the price. So always look for entries only when the liquidity is taken out. In order to take the entries and go with the algorithm, you should need to identify where the liquidity is in the marketplace. It is the very important concept you should learn in order to identify where the algorithm is moving the price. So here in this case, the price is moving in the uptrend. The price is moving in the uptrend. When the price is moving in the uptrend, all the liquidities towards the downwards are called inducement liquidities. These liquidities are very high probable. The same thing happened in this example I'm showing you. If this liquidity is taken out, here in this case, there will be a lot of stop losses will be there. Stop losses are the fuel for the price. Stop losses acts as the fuel for the algorithm. They take the stops and then they will move the price into the desired direction. So always we should identify the liquidity graphs. There are many types of liquidities that market makers will form in order to take the liquidities. So this is the continuous cycle it will follow. It will accumulate the orders, they will manipulate the orders, then they will distribute. The same cycle. Here in this cycle, the accumulation is this liquidity. This is the smart money liquidity. Because lot of smart money will have stops here. Will have stops here. Liquidity got taken out and the price will reverse. These cycles happen over and over and over and over and again in the marketplace. So let's learn about the different types of liquidities in the marketplace. These are the five important liquidities in the forex market: ranges, smart money traps, wedge patterns, double tops and double bottoms, and retail chart patterns. So I will explain each and everything in a detailed way in this video. Watch the video till the end. Make sure you subscribe and like this video because there is lot of information that was coming soon. So the first thing, ranges. Ranges means consolidation. The price action in the ranges will somewhat looks like this. The price will behave in a tight range. They will form the tight range and then they will manipulate it one direction. This is the accumulation, manipulation. Then we directly enter the price here. The entry pattern I am going to teach you in the video. So watch the video till the end. So here we directly entering at the price in the accumulation cycle. After the accumulation manipulated, we directly entered at the manipulated where the liquidity was taken out and target the high of the buildup. This is how we trade from liquidity point to the liquidity point. All these ICT traders are focusing on the wrong things. They are focusing on the FVCs, IFVCs, order blocks, lot of funny names. This makes complicated all the ICT things, ICT entry pattern. There are ton number of ICT entry patterns out there. But this is what you need. This is the market mechanics. This is how the algorithm moves the price. Liquidity is the key. Other than anything, it's waste of your time. Liquidity is the key. Keep it simple. So we entered at here and we target this liquidity. And what are SMC traps? A lot of traders think like this. The market obeys a form of structure. The market consists of a form of structure like this. It's completely wrong. The market doesn't consist of any structure. The market moves however it wants and it moves from liquidity point to the liquidity point. The market moves like this. Liquidity grab, it will move. Liquidity grab, it will move. This is how the market moves. This is the real structure of the market. This is the engineer structure. This is used as the liquidity. All these are liquidity points. If it was taken in the future, we can expect a reversal. This is very, very high probable liquidity point because lot of retail people and smart money people will have stops here. They will buy here. What they will do is they will exactly do this. Their stops will be here. Stops means liquidity. Liquidity is the fuel for the price. So the market will come and take the liquidity with huge speed and aggression. Here, retail people will enter and smart money people will get stopped out. Every lot of liquidity is accumulated. Then we enter here exactly at the stop loss hit. We enter the price and target this liquidity. This is how the prices moves in the forex market by the algorithm. So the third thing is wedge patterns. There are two kinds of wedge patterns are there in the forex market. The first one is upside wedge, and the second type is downward edge. This is how it looks like basically. So this is the accumulation part of the liquidity. This is what we call as accumulation, and this is the manipulation. There will be manipulation here. So here, after seeing this breakout, all the retail people will think, oh, there is a huge breakout, so we should buy. The price is going to the moon. All the emotions they will get, FOMO, fear, etc., and then they will buy without knowing anything about the higher time frame or liquidity concepts or anything. They are trading blindly. If you don't understand where the liquidity is, it means you are trading blindly because this is how the market moves. This is how the market sets up. It will take the liquidity and reverse. Simple. So we directly sell here. After all the liquidity got taken out, we sell here and target the build up low. Easily you will get lot of high RRs by trading this type of strategy. And also the second form of the wedges are downward wedges. Build up high, build up low, liquidity got taken out here. Same thing. Lot of retail people will think this is a strong trend line, and and here they will think that there is a huge break of the structure, so that's why they will sell here. This is how the retailers trade. They will sell and target the next support level or anything. This is how they trade. They don't know anything about the money levels or liquidity levels, anything. Even the smart money people, even many ICT traders make complicated and ignore the real source of the market. This is how the real markets work. I have spent more than 5 years of backtesting experience and collected this edge that I am showing you. We directly enter here. And in this scenario, smart money people will again enter. They will enter here. They will think this is the break of the structure. This is the fake order block liquidity again. And we can use this as the first TP, second TP. Easily we can get high probable trades by using this strategy. And the fourth type of pattern is double tops and double bottoms or equal highs or equal lows. You can call it as any way. This is how they will look like. Double tops, this is. There is lot of liquidity will be residing in the equal lows or equal highs. As always, there will be lot of liquidity that will be residing in the equal highs or equal lows. That's why when the algorithm takes out the equal highs, we can expect the price will reverse because there will be a lot of liquidities there. Liquidity means fuel. If the algorithm want to move the price, it needs to take the liquidity. So we can exactly tell that if algorithm took the liquidity, it was going to move. The volatility is going to come so that we can just enter the market and we can cash out all the volatility. This is the simplest explanation and clearest explanation anybody can give. This bullshit, Instagram gurus and everything, they are complicating the stuff. They're complicating the stuff. It's nonsense. This is the easy method of the liquidity. You just need liquidity. And what is the another thing? All the retail patterns. This is also very, very important. Every retail pattern is targeted. Normally, how retail traders will trade this pattern? They will learn this pattern in some other brokers books or anything. They will learn this all these concepts from YouTube videos or anything, and they don't know about the back testing or data collection or anything. They will blindly follow those setups without even executing them in the demo first. They will directly put their real money in the accounts and they will trade. They don't know about anything. These are the all everything is the fake patterns. The break of the structure is the fake pattern, and the structure is the fake pattern, and the double tops, double bottoms break of the structure is the fake pattern. Every retail pattern is a fake patterns and that are used as the liquidity by the market makers. This is the very very important thing. For example, ranges. These retail people will use the ranges like this. They will think the market will shoot up after the ranges break up the structure. They will end here, but the markets 9 out of 10 times it will take the liquidity and it will go. Only one time it will happen. This stuff happens only one time, but the retail traders will trade this because they don't know about the backtesting data or anything. Simple. But we know how the data looks like because of my experience in the forex market. This stuff happens 9 out of 10 times. So that's why we trade like this. And also, if we found any ICT mentor or anything spelling that they have 100% win rate, just block them. They are completely scammers. Simple. There is nothing 100% probability in the trading. It's the trading is the probabilistic environment. If there is any 100% win rate, everybody would trade that strategy and everybody would billionaire. And also, if the market makers didn't give at least one win or two wins for the retail chart patterns, they will never trade these concepts. And these are never used as a liquidity. So that's why these retail patterns will get wins. And they get very, very less wins, one or two wins in a 9 or 10 trades. So that's why. But these liquidity concepts I am teaching you will give you highest risk reward ratios and highest win rate. This is the facts of the market. You can't find it any other gurus or Instagram videos or YouTube videos. So make sure you follow the real stuff. Subscribe to this YouTube channel and like this video. So let's discuss about the entry pattern and everything. This is the exact checklist you should need to follow in order to take the trades. The first thing is you should check the news, understand the high time frame picture, and understand the narrative. Mark intraday liquidities that are very clear to your eyes, previous day's highs by previous day's low, or internal liquidities. Wait for speed and aggression, taking the liquidity in 15 minutes time frame. Wait for the rejection candle once the candle sweeps the liquidity. Entry there and target the appropriate levels according to the higher time frame. The buildup should be clear and should go opposite to the direction of the sweep to trap the early buyers by sellers. If you follow this all the rules, you can get literally very very high risk reward and high win rate strategy. And I have got all the data collected in the past year according to the strategy. These returns are phenomenal. In a single month of October, we got 78% win rate, 19% account gain. All the months were like that. You can see January, we have 12% account gain with 62.5% win rate. I got all the stats for this data. So I will explain you the exact rules and how to apply it. Watch the video till the end. Make sure you like and subscribe the channel. So according to the checklist, you should understand the higher time frame picture and understand the narrative. So the first thing you should get from the daily time frame is what is the recent liquidity sweep. The recent liquidity sweep in the daily time frame is bearish like this. If you are in the daily scenario like this, the recent liquidity sweep is bearish. It is telling the sells are coming and we should target this liquidity. So in the intraday time frames, in the 15 minutes time frame, we should only focus on the sells until the daily time frames takes this liquidity. We always analyze the direction of the market from the liquidity standpoint, not like the structure traders who understand the direction of the market based on the structure break of the structures and everything. We understand the direction of the market from the liquidity standpoint, like liquidity is taken out, we buy. So this is the difference between the smart money people and liquidity traders. We understand the direction from the liquidity standpoint. Here the last liquidity sweep is bearish. So that's why we only focus on the sells in the 15 minutes time frame. This is the very, very important. So I will use for the 15 minutes time frame, I will use color blue. So when coming into this day, when the 15 minutes did this, now two time frames are aligning each other. Here the daily time frame is aligning with the 15 minutes time frame. This is the very, very high probable scenario because same like the structure traders doing the multi time frame analysis, we are doing the multi time frame liquidity analysis. If two time frames liquidities are aligning each other, we get very, very high risk reward trades. We can just take the sell and target the next daily liquidity. This is how we get very, very high RRs using the liquidity concepts. And if we got any buy opportunities with the buy liquidities, we can take the buy small scale and target the order block or this liquidity, because we should not target the higher time frame liquidity because here the daily is telling the sells are more probable. So that's why we should be very, very, very careful while taking the counter trend moves against the daily trend. So this is the very, very important topic, and this is how we identify and understand what the higher time frame picture is. So next thing, mark intraday liquidities that are very, very clear to your eyes. Previous day's highs or previous day's lows or internal liquidity. So what are the internal liquidities? The internal liquidities, you should watch all the price observations in the 15 minutes time frame. The intraday liquidities can be a clear range, it can be a clear smart money trap, or it can be a clear double bottom. As I showed you in the beginning of the video, there are lot of liquidities are there. It's just you should do just opposite to the smart money people and retail people. These are the sheeps that are doing the wrong things in the market. These sheeps are used as the liquidity, smart money sheeps and retail sheeps. You should just wait for all the liquidation of the things and we should enter. This is the 7 point checklist you should use, and it's the proven checklist. I have shown you already the results. A lot of students are profitable even using that concepts from my YouTube. A person messaged me, I don't know his name, he became 200k funded just by using the profitable strategies in our channel. So make sure watch all the content in our YouTube channel so that you can be profitable too. So these are the simple liquidities you should use. Just mark the liquidities. This is the third point of the checklist. Just identify the liquidities. The only job is to, when coming into the day, is to identify the liquidities. Simple. So you identify the liquidities, you mark the liquidities, mark internal liquidities that are very, very clear to your eyes. We mark the liquidities, wait for, this is the very, very important entry pattern we use. We wait for the speed and aggression, taking the liquidity in 15 minutes time frame. So what is the speed and aggression? We should wait for the high volume imbalance candles. High volume imbalance candles taking the liquidity. This is what high volume imbalance candles like taking the liquidity, because normal people can't print these type of chart patterns. Normal people can't print this type of chart patterns. Only smart money people will can print this chart patterns. This indicates huge move is going to come because they print this type of price action to take lot of liquidity. The speed and aggression, it's also called as spoofing. When this type of price action came, there is a 90% of the chance the price will reverse. So this is the entry pattern we use. We should see same type of vector candles. You can call it as the vector candles, imbalance candles taking the liquidities, or huge speed and aggression. For the same every liquidity pattern, we should see this speed and aggression taking the liquidity. Same thing here too. Same type of candles with having huge bodies, no wicks, taking the liquidity. These are very, very high probable because these candles are formed by the algorithm to take the liquidity. This is the pattern that algorithm follows while taking the liquidity. Same thing here. While taking this inducement liquidity, it will follow this type of 15 minutes speed and aggression thing, and we wait for the entry pattern reversal candle, and we buy here, target the high time frame level if it's aligning with the high time frame. So this is how we enter the price simply, and also wait for the rejection candle once the candle sweeps the liquidity. Same thing we have discussed here. So we should, after observing the speed and aggression, we should wait for the rejection candle. It may be the dozy candle or it may be the engulfing candle. We should just wait for the rejection candle and enter the price action. Same thing here, speed and aggression there. We should just wait for the dozy candle or any simple rejection candle. So that indicates the price is very, very ready to reverse. Everything in the checklist is met. Liquidity is taken out. Speed and aggression is indicating that the reversal is coming soon. So we just buy. Simple, we buy here, targets. Easily you can get 7%. This 7% can pass your funding challenge. Simple. And also same thing here, we wait for the dozy candle or engulfing candle. Let's say this is the engulfing candle, black color. So he will sell here, target next. This is how you should take the trades. Now I will show you a lot of examples from the strategy so you can understand it clearly. Make sure you like the video and subscribe. So let's deep dive into some of the examples that were produced by the ICT liquidity strategy. So these were all the trades in the span of 2 days by the ICT liquidity strategy. And this is the trade we took today. It's going very, very good because of the previous day central liquidity. So now I will explain each and every trade in detail. So make sure you watch the video till the end and like and share the video. So the first thing we should understand is the liquidity. The first point in the checklist is we should understand where's the liquidity is in the marketplace. The liquidity can be a smart money trap. The liquidity can be in a form of the range. The liquidity can be a double bottom or double top, or the liquidity can be any type of retail patterns. So you should first identify the liquidity. As I identified the liquidity, there is a clear liquidity sitting here. There is a clear previous day's internal liquidity sitting here. Previous day's internal liquidity means any clear swing low or swing high in between the day's high and day's low is the previous day's internal liquidity. This is the previous day's high and previous day's low. This is the previous day's low. And there is a clear swing low in between the previous day's high and previous day's low. So this is a very, very clear liquidity. So that's why I am targeting this. This target is not random. Everything is calculated by the algorithm. We got data. So that's why 80% chance is there of reversals from this level. So that's why we just take 80% of the profits here. Everything is data driven according to me and my strategy. So we took a buy here and targeting this liquidity. Same thing. How we took this buy. There's a lot of range liquidities being accumulated here. Lot of range liquidity. If you can see, there's a lot of range trend line is coming out. First tap, second tap, third tap, fourth tap. So here, after seeing this lot of speed and aggression, lot of retail people will think there is a huge break of the structure, volume break is there, and the price is dropping to the hell. So that's why they will trade like this. You should just do opposite to the ships. This is the name of the game. The market makers wanna have control over the market. So that's why they will target each strategy. They will do like this and we just enter with the algorithm manipulation with the huge speed and aggression. This is what I teach you in the entry pattern. The huge speed and aggression in the 15 minutes time frame. We keep all the price observations for the entries in the 15 minutes time frame. We should see this type of big vector candles like this, similar candles with imbalance. I hope you can see similar type of candles, same type of candles, same type of candles. We exactly waited for the reversal candle formation here. In this case, it is the dozy candle. We entered the buy and targeted the next liquidity. Same sell we took here is because of the same pattern. Previous day's high, this is the previous day's high. Liquidity was taken out with a huge speed and aggression. I hope you can see the same type of candle, same type of blue candles taking the liquidity. This indicates speed and aggression because these produce these type of price action because to induce more and more liquidity by seeing the huge candles they will get FOMO and everything. These market makers exactly know the human emotions and that's why they will produce these type of price actions. Everything has a solid reason why they are coming and everything. So we target this liquidity and also I will show you lot of trades. If you see here, this is the Asian liquidity here, Asian liquidity. And if you see how it was taken out, again, speed and aggression taking out the liquidity. Can you see this candle volume taking out the liquidity? Same strategy. We took a sell here, stop loss to be safe above here, target. Next liquidity, simple. You can get easy 4.17 RR. This is how the trading should be very simple. And also there is a trade in the midnight, but I avoided it. I didn't took it because the timing is not there. Otherwise, everything in the checklist is there. The timing, except timing, everything is there. Can you see the speed and aggression taking the liquidity? This is the same day's liquidity, session high. Exactly, you can enter here. Stop loss to be safe here. target, next liquidity. These are the type of moves you will take in and out of. Ping pong the market. You can literally ping pong the market. We got only one opportunity today. You should be very, very mindful. You should only take the trades that are according to your strategy. If you take the trades that are not according to your strategy, you will never be profitable in the marketplace. You should be very, very disciplined and mindful and accept the losses, and then the wins will automatically come. So here, if you see, this is the previous day's high liquidity. This is the speed and aggression taking the highs. Everything in the checklist is there. Here, you will take a loss, which is the probabilistic loss. No mentor in the YouTube will share the losses to anybody, but I am fully transparent. If a YouTuber is not showing losses and only sharing the wins, he is a scammer, 100%. See, the trading means both wins and losses, but with our strategy, the wins are more than compared to the losses, and the risk reward is very, very high. So that's why we can be profitable by the end of the day, even though we took some losses. This is the part of the game. This is how the game is designed. And also, there is a trade in the Asia session. Simple. I hope you can see this. Internal liquidity, previous day's internal liquidity. This is the previous day's low. Previous day's internal liquidity was taken out with a huge speed and aggression. I hope you can see this huge speed and aggression. We took a sell here. Simple. Targeted the next liquidity. Simple. We got 7 hour. We targeted the liquidity from the left. So these are all the trades we took using the ICT liquidity strategy. So if you mess up with the psychology, no strategy in the world can help you. The psychology is the 90% of the trading, the 10% is the strategy. So if you need any help regarding the trading strategy or anything, you can ask me in the comment section. I will reply you instantly. And also make sure you follow the Instagram and Twitter. And also, if you want my one-on-one personal training, there is a link in the description and the comment section. You can join through that. Peace.